Sir, Ajay sir, I'm sharing the video YouTube link also, sir, to you.
Okay.
And just we'll start allowing the participants.
Yeah. Dr. Tripti, you send me your bio, no? You have sent already?
Yes, sir. I have sent it.
Do you remember on which phone? I mean,
I think I have sent it to Pawan Kumar, sir. I'll send it to you, sir. No problem.
Can you send it now?
Yeah, sure.
You have sent earlier with the photograph, I remember, but I'm not able to find it now.
To whom I have sent? Yes, it's in
you
the.
You did send to me because I had your.
Let me check, sir. Yeah.
Or is it in our faculty group?
It's there in the faculty group. I'm sending it to you.
Okay, please send it.
Yeah.
Yeah, thank you. It has come.
Yes.
Sir, shall we start, sir?
Yeah, Pawan.
Sir, మీ కెమెరా కొంచెం కిందకి రండి సార్. మీ ఫేస్ కనిపించట్లేదు, హాఫ్ కనిపిస్తుంది. Yeah.
I'll try.
Yeah, very good afternoon and warm welcome all the financial fitness enthusiasts for this yet another session, a woman empowered and powered session. I think we are very excited and waiting for this session for a long time. Dr. Tripti ma'am has gracefully agreed to give us a very nice talk on the pricing charts, which is very important because the price is the king, they say, in finance. So a financial fitness program for pediatricians has been started, I think 3 years back under our my secretaryship, and the president as Dr. Surendranath sir. And at that time, we requested our lead coordinator, the most charismatic personality of Telangana state, Dr. Ajay Kumar sir, who outrightly, selflessly has conducted the 8 weeks certificate program for all the pediatricians. So that has reached a record number of 1,040 pediatricians. I think this is 1,100, sir, as yesterday posted. There's more than 1,150 pediatricians who were into the group of financial fitness program. I think we should congratulate our entire faculty team for making it more successful and more. All thanks and all kudos to Dr. Ajay Kumar sir, our lead coordinator for financial intelligence program for pediatricians. So I request the sir to give a brief update about these sessions and hand over to Tripti ma'am, who is the speaker today.
Thank you, Dr. Pawan. That's a wonderful seeing on all of you on Sunday afternoon after that marathon session from yesterday till today in Nashik, the hometown of our today's guest speaker, Dr. Tripti. We did have a very, very exhaustive topics discussed in this particular conference by Maha Manikom of IMA Nashik. We just finished it. It's still going on. We have to disconnect and come back to our scheduled program. It's my pleasure and honor and privilege to introduce Dr. Tripti Harshad Mahatme. She is an MBBS, DCH, DNB, and IBCLA consultant pediatrician and lactation consultant and EQ trainer. She runs a Sri Child Care Clinic, a Sankalp Specialty Hospital in Nashik, Maharashtra. She is an editor of Maharashtra State Branch of IAP and a EV member of Nashik Adolescent Health Academy chapter. Before I hand over the platform to Dr. Tripti, as usual, I will be sharing a brief introductory slides of few of them for the newcomers. And as Dr. Pawan has said, we have already reached 1,200 members in our WhatsApp group of Group 1 and Group 2. And just yesterday, I gave a talk to 80 members, neonatologists in Fernandez Hospital, and they all are joining. I've all started joining also. So day by day, we are increasing our participation in our WhatsApp group for the very basic level of exchange and learning session on personal finance. It was surprising to see that there were 1,750 registered delegate in the just concluded a program of IMA Nashik in a physical and an online hybrid program. Something like that, our faculty is also advising us to have a physical program in the coming months in Hyderabad, so that more number of people will start attending and more elaborate deliberations can occur. So give me a second to share our regular PowerPoint and also a little bit brief about our sessions and talk. Can you enable me, Dr. Pawan, to share the screen? You have disabled actually. I can't hear you, Pawan. You are muted.
Sir, now I think two devices you are joined. I made another one. I think you can start doing it now, sir. You can do it now.
Sorry. Okay. So, yeah, I think, let me see now if I can do that. Is the screen visible, Dr. Pawan?
Yeah.
Is the screen visible?
Yes, sir. It is clear. Yes,
Yeah.
sir. Yes, sir. It's coming up. 1 second.
Yeah. So
Yes,
this
sir.
is the financial intelligence.
Sir, keep it in full slide mode, sir. Slide. Start the slide. We are seeing both slides.
1 minute. Yeah. Let me start sharing again. There's some issue, I think. Yeah. Is it okay now? Yeah.
Yes, sir.
So this
Perfect,
is financial intelligence for pediatrician series number 2, as Dr. Pawan has said, of the Pediatric Academy of Telangana President Action Plan. Is the 3rd year in running. We started, as he said, Dr. Surendranath, when he was the president of Telangana Indian Academy of Pediatrics State Chapter. Then continuing with Dr. Yashwant Rao Elladi now. And these are the virtual webinars which we are doing since past many months. This is our 14th talk and virtual webinar, and being well attended and well discussed in our WhatsApp group with the different topics. And this is your coordinator, Dr. Ajay Kumar, along with Dr. Pawan Kumar, who's our tech assist, along with Dr. Harish Gopal, who's our academic director, and the other faculties and technical advisors and admins. So let me start with a regular disclaimer and a declaration that this program is only for awareness and education purpose. We are not investment advisors, and we request you to do your own research and due diligence and take the financial advisors' advice from a registered, qualified, experienced advisor. And we definitely, in our FIP F3 team, discourage strictly day trading or short trading or trading on tips and stock investing on a borrowed money. We are grateful to our faculty who have been doing workshops with us from past 3 years. We have 14 faculty so far who have honored us by talking to our participants since past many months, almost from February, January of 2023. And these are the various topics which we have discussed. To just recollect: financial planning, insurance, debt funds, mutual funds, index funds, stock VIP model, basics of stock market, wisely investing in stocks, taxation for doctors, home loans, technical analysis, part 1 by Dr. Naresh Biyani, Mumbai earlier, large cap investing, importance of technical analysis, introduction of trading view, and children's education and retirement planning last week. And now Dr. Tripti Madam's technical analysis. Part 2, candlestick chart simplified. So thank you very much, all the speakers, for covering all these topics in this FIP series 2023. And we hope that this particular myth, which is fact, Dunning-Kruger effect, which we all suffer from, will be lifted, and we will all become financial literate and savvy after attending some of our programs here through our new learning process, which will help us in new earning as a second income for our professional work, and creating the wealth from our regular practice, and try to multiply the wealth after learning few of the basic things in this particular program. Let me tell you about the next couple of talks which are pending, and there today we are having a basics of technical analysis. Part 2, candlestick simplified chart is being simplified without, I think, overlay, as Dr. Tripti Madam has requested me. And on 6th August, Rajesh Kulkarni is going to talk on credit cards. On 20th August, Dr. Chetan Mundada from Hyderabad will talk on health and term insurance. And on 27th August, we are going to have a talk on real estate by Amish Vora, who was one of the speakers today in the IAP Nashik. Those who have seen him will be aware that he is an erudite speaker. So with this few words, I hand over the platform to Dr. Tripti, and over to her for starting the talk. Thank you very much.
Thank you. Thank you so much, sir. So before I begin, I request everyone that this is a fully objective session. So please focus, and if possible, please shift to your bigger screens, laptop or desktop, to have better understanding of the price chart patterns. So today I'll be talking about price chart patterns. So my PPT is visible?
Yeah.
Yeah.
Yeah, it's visible.
Okay. So, a bit about my financial journey, which is still ongoing. So in 2018-19, I did my technical analysis with Mr. Sachin Kulkarni from Nasik. 2019 onwards, I joined WealthCon under Dr. Ramnath Bhute, who is founder of WealthCon, and I did various of their courses like BIC Advanced Investor Course, Cool Trading, and Tradevesting Mentorship Program. And 2022 onwards, I joined Financial Fitness PATS group. So thanks to Dr. Ajay Kumar sir for making me part of this group, and which is a fantastic learning platform, learning about the diversified aspects of the finances from people having different perspective about finance. It's really a great platform. So thank you so much. So what is our learning objective today? So this we are going to learn. And what are these? Triangle, rectangle, curve, saucer, head, shoulder. So at what age we start learning this? At what age we start identifying this? Toddler? Yes. So this is a basic of technical analysis, basic of price action. Okay. And basic lays our foundation. So foundation is very important. So please focus. Now, what I feel, if you want to be in a stock market, we should have enthusiasm and curiosity of a preschooler. We should have discipline of a school child. We should have a bit of risk-taking ability and aggression like an adolescent. And at the end, what is very important is mind management, managing our own emotions with positive outcome like an adult. So let's start now. So what is a price pattern? A pattern is a configuration of price action that is bounded above and below by trend lines or support and resistance lines or curves. Usually any pattern is accompanied and confirmed by large volume. So before we jump to patterns directly, let me clarify a few concepts which are related for better understanding of the patterns, like trend line. Few of these are repetition, but as these are important, I'm telling these again. So what is the use of trend line? It's a useful tool to identify trends, trend reversals. It acts as support and resistance. It gives us target, how we will see. It tells us about the price pattern breakouts. And how do we draw a trend line? It must be drawn connecting two or more peaks or troughs. What about trends? This everyone knows: uptrend, that is bull market, sustained price, sustained period of rising price; downtrend, bear market, sustained period of falling price; and sideways trend, that is stable price for for some duration. So this is downtrend. As we can see, there are lower lows in succession and lower highs in succession. Here there is some consolidation, so sideways trend, and again there is an uptrend, so higher highs and higher lows. Next concept is support and resistance. This is very important because this tells us about the specific price point on a chart which are expected to attract maximum amount of either buyers or sellers. Support price, there are more buyers than sellers as there is maximum demand. Resistance price, there are more sellers than buyers as there is maximum supply. What is the next importance? They can be used to identify entry points and target price. So coming to support, the importance: price falls till support, then support prevents the price from falling further. There is some consolidation at this point. It absorbs all the demand and then it starts moving upwards and price is likely to bounce back. What is the bottom line? Look for support in a falling market, which acts as a trigger to buy. So this is how we draw support lines. You draw or join any two lows. Here there are 1, 2, 3, 4 lows. So this is the important support line. As you can see, price fall here, then again has risen. It fell here, then again risen, and multiple times price has taken support at this line. This is again one support line. Single most important point, we can place a horizontal. Here it's acting as a resistance line. So this is important support line. Now coming to resistance. So price rises up to the resistance level. It consolidates there, absorbs all the supply and then declines. So this top line, when we join two tops, 1, 2 tops, again we extend it further. Third top is automatically connected. So here there is maximum supply. Price is going to the resistance lines, coming back, resistance line coming back, and the same price movement is occurring. If we extend this resistance line in future, the same line, here this resistance line is broken, the uptrend has started, and same resistance line has acted as a support over here. So once resistance is broken, it becomes support. Here one more resistance line. This is 2007 to 2011. So we join these two tops and it has formed important resistance line which will act as a support line in future. So this is how price oscillates between support and resistance till it breaks above it. So if we extend this resistance line till here there is a breakout occurring and then trend changes to uptrend. Okay. So what do we mean by breakout now? So breakout is a stock price moving outside a defined support or resistance level with increased volume. A true breakout has two distinct characteristics. First, volumes are very high, and second, after the breakout, the momentum is very high. That is, rate of change of price is very high. Breakout is a signal that prices are beginning to trend either upward or downward. So this is how we identify breakout. First, I have drawn this resistance line connecting these two tops. And here we can see a large green candle. This is a bullish candle which has given breakout. Again, price has risen. At this line, again, there is a resistance line drawn. And this large candle, bullish candle, has given, it indicates breakout. So how breakout helps? If we identify breakout early, we can take position within a trend early stage. This is a universal strategy. It's a great strategy. It works in any type of trading, maybe day trading, swing trading, or any long-term investing. We can identify breakout early when the accumulation phase is going on, and we can take entry earlier. And when managed properly, it offers limited downside risk. So identify breakout is very important. It helps us for momentum trading. Now, breakout can fail. And what is the definition of failure? If breakout occurs and price fails to move at least 5% in the direction of breakout. Now, there are different definitions. Some people say 2%, some say 3%, some say that consecutive 3 or more candles should close about the resistance line, but breakout can fail. This we should remember. What is fake out? It occurs when price opens beyond a support or resistance line at some particular day, but by the end of the day, when the market closes at 3:30, before that, they wind up moving back within the prior trading range. Okay, so this is known as fake out. Now, next important concept is about pullbacks and throwbacks. What do you mean by this? This is the return of price to the predefined line of support or resistance, which was already broken. What is the importance of this? Each may provide a second opportunity for action at the breakout level. Let's understand this. So first, this is a downtrending stock. This is a support line. Now this stock is coming down. It has broken this support line. It has gone down to a particular low. Then again, so sellers are taking action over here. Okay. And here who will take entry? Sellers. So short sellers is a known thing in market. Some people sell stock and they earn money. So price achieves some low point. Again, this support line is tested. This resistance line is tested. Price goes up to here, but it cannot break above this line. And from there, a significant downtrend starts. So this is known as pullback. Now, what is the importance? So suppose some seller has missed entry here. He can take second entry over here. So this is opportunity to enter again. Resistance or throwback. Suppose this is a resistance line. Stock is trending upwards. Price breaks this resistance. Okay. It will go up to a certain point. Again, it will come back to test this resistance line. But as this resistance line has become support line now, the price will again start moving upwards very fast. So buyers who have missed entry over here can have chance to take entry at this stage. So this is why pullbacks and throwbacks are very important in breakouts. Now, this is how it looks in price action chart. So here there is a downtrend. This support line is broken. Price went down. Again, it has risen to this resistance line. And again, so here there was a chance to enter again. Okay. And then stock started trending downwards. Here, price has broken through this resistance line, has gone up, again tested. So here, buyer can enter. Those who have missed entry here, he or she can enter here, and then the price starts trending in very fast momentum. Now the last is volume. Only few slides I have I'm showing. So what volume indicates? How many shares are bought and sold over a given period of time. How it helps? It helps us to confirm trend and patterns. It also helps us to gain insight into how other participants are perceiving the market. So other participants means how smart money or institutions are perceiving the market. So suppose I am bullish or bearish on Reliance, depending on the volume, I'll come to know whether others are bullish, especially the institutions are bullish or bearish. So identifying volume is again important. And what is the thumb rule? High volume is today's volume should be more than 10 days of last 10 days of average volume, and low volume means today's volume should be less than last 10 days of average volume. How do we calculate average volume? We put a moving average line on volume bars. Now, coming to what is the relation between price and volume. So suppose price is increasing and volume is also increasing. What is the expectation? That trend will be bullish. Why? Here volume is increasing, and who will increase the volume? Who will take the market up? Institutions. So increasing volume means institutional activity is taking place. They are putting their smart money over here. So price is going up and trend has started. Okay, when institutions buy or sell, they buy in large quantity like 5 lakhs, 6 lakhs, 7 lakhs. When we buy and sell, we take small quantity like 400, 500, at max 1000, etc. So this large volume delivery by institution moves the price. So what is our job? We just have to hold their hand and sell in their boat. Okay. Second scenario, price is increasing but volume is decreasing. So institutions are inactive here. Who is playing with the stock? Retail investors like us. So we should be cautious here. Because this is like a bull trap. Price is uptrending. At some point at top, institutional activity has stopped, but retail investors are thinking that stock will go up. So it's a bull trap, and we don't know what's going in mind of institutions. Okay. Next is price is decreasing and volume is increasing. So here again, institutional activity is taking place. They are selling. Price is decreasing means they are selling and trend is bearish. And the last is price is decreasing and volume is decreasing. So again, here retail investors are handling the stock. So this was about price and volume relation. Now coming to the patterns. Why patterns form? It is a saying that bear in a mind that behind every algorithm, there is a human idea. The market changes, but human nature doesn't change. By now, we all know that technical analysis tells us about human sentiments. That's why all the patterns usually always have same general characteristics. This is odd, but this is true. Humans tend to see the future as the past and look backward rather than forward. So now Reliance has attained all-time high of 2,800 and now it is trading in the range of 2,500. So again, everyone is hunting to enter to buy the Reliance, expecting that it will again rise to 2,800 and it will have long uptrend as it's in Nifty 50 since many years and contributing to Indian economy a lot. So these biases and tendencies in human behavior are measured and explain why price patterns seem to exist. Now, why to focus on patterns? What is the significance of patterns? So patterns help us to identify trading opportunity. All the patterns are combinations of entry and exit. There are target peculiarities of each pattern. We know how much is the risk involved and we know how much is the expected holding period. In a nutshell, pattern speaks about entry, exit, and expected reward. What is our job? We should be disciplined enough to stick with our plan and know when to get in and get out of the stock. Patterns can fail. So not patterns will be 100% successful. So when stock attempts to retest a prior support or resistance level and it breaks back through the pattern, then we say that pattern has failed. Okay. Now, what are the different types of price chart patterns? So there are reversal patterns and continuation patterns. What do we mean by reversal? There are two types again, bullish reversal and bearish reversal. Bullish reversal. So suppose stock is trending up downwards. It has attained certain low at the bottom. At the bottom, it has formed certain pattern. There will be breakout of that pattern and stock will start its upward journey. So this is bullish reversal. Bearish, stock is trending upwards. At the top, there is some pattern formation. This pattern breakout occurs. At the downside, there is breakdown and then there is downtrend. Okay, so this is bullish and bearish. Continuation patterns, there is bullish continuation. That is uptrend has already started. At some point, there is the price will take halt. There will be some accumulation, pattern formation at that level. And then again, pattern will resume its original trend. So this is bullish and bearish continuation patterns. So what are these patterns? So bullish reversal, double bottom, triple bottom, cup and handle, inverted head and shoulder, V formation, etc. And bearish reversal, double top, triple top, rounding top, head and shoulder. And continuation patterns, triangles, which can be ascending, descending, and symmetrical triangles, flags, ascending and descending flags, pennant and rectangles. I have highlighted important patterns only. So first coming to a double bottom. Sorry, this is double bottom or W pattern. So this is a bullish reversal pattern. This follows a downtrend. So preceding downtrend is important. There are three reversal points, two bottoms, first bottom, second bottom, which are separated by a peak. So this gives appearance of W. So not necessarily the two bottoms should be at the same level. There can be variation. The second bottom can be at down or it can be at higher level. It should be both the bottom should be within 3 to 4% of each other. So this is more favorable. It indicates that buying pressure is so much that buyers have started buying. They are so much interested. They are buying the stock at higher level itself. This is how it looks in price action chart. What do you mean by this in buyers and sellers term? So sellers are selling there is a downtrend. At some point, this downtrend stops, a low point or support is achieved. Now, buyers are coming into action. They have started taking the price up to this high. This makes the resistance line of the pattern. Again, sellers take action and they'll bring back the price to this bottom. But here they are exhausted and unable to take the price further down. So this level makes important support. Now, as sellers are exhausted, buyers will take further action, further control of the market, and they will take the stock up, breaking this resistance line. At this level, there is breakout and the uptrend starts. So this is regarded as a very reliable reversal signal and frequently used to enter long positions. What about volume? First bottom, high volume. Second bottom, less volume. A spike in volume occurs during the two upward price movements and also expansion of volume during the breakout, which confirms a true double bottom pattern. So these are the live charts. This is HDFC Bank weekly chart forming double bottom, first bottom, second bottom, and here there is an intermediate high. And the trend had changed to uptrend. So these two bottoms were never tested again, marking significant support level. Now, how to trade this pattern? So entry above the closure of the resistance line. This is the first entry. If we miss it, we can take second entry at the throwback. Target distance from two lows to the intermediate high in the middle of pattern. Second target, 2 times of this distance. Okay, so let's understand this. So this is support line joining these two bottoms. This is resistance line. Okay, distance between these two, the lowest point and this high, is our target. Okay, so how much is this? This support line is at 879.25. I have done in both ways, manual and also price range from the trading view. And this resistance is at 990.8. So what is the difference between two? 111.55. So this is our target point. Okay, so we add this to 990.8 plus 111.55. So our target is 1102 and it has been achieved. Okay, this is the price range which is readily available on TradingView. So this is easier, I think. Next, this is HDFC Bank. So our the difference between these support and resistance is 241 points and the target is achieved. Stock is even moving further. So this was about double bottom. Now double top. This is a bearish technical reversal pattern. It develops following uptrend. There are 3 reversal points, 2 peaks, first peak, second peak. This is separated by a trough. Top usually, or the pattern usually has an upswing. How do we identify? So stock is trending upwards. It will form the top, then trough. This is the support level, second peak, and then the fall. Okay. Now these 2 peaks must not be exactly at the equal price, but they should be within 5% of each other. Volumes will decrease throughout the creation of the 2 peaks. It increases when the pattern breaks below the neckline. So any breakout, volume should increase. So this is a chart from Investopedia. So stock is uptrending. First top, second top, the lowest of the trough forms our support line. When this support line is broken, downtrend starts. This is retested. So here there is a pullback, but selling pressure is so much that price couldn't reach the resistance line and it has fallen down further. Okay, so this is Wipro chart, Wipro daily chart. So as we can see, there is a nice double top formation. This is our resistance line. This is our neckline or support line. Drawing this neckline is very important, and height of this pattern will give us target. Let's see whether it's achieved. Yeah. So the total height is minus 125 points. So this has been achieved. Okay. So this chart I have purposefully included. I just again wanted to show what is the importance of support and resistance line. So here again there is double top formation, but the buying pressure is so much that this support line was never tested and stock started trending upwards. Here again at the top there is double top formation. This is a support line and this stock has broken down here. So this is important how support becomes resistance. Here, the support line has become resistance. The price couldn't move above this resistance line. Now, how to trade this? Where we'll take a trade, start a short trade or sell position after the breakout happens. Stop loss will be above the most recent swing high. Profit target, I already tell you the distance, vertical distance between the top and the neckline. Now we need to use whenever we are trading all these patterns, we should look for other extra technical indicators or oscillators like any bearish divergence on MACD or relative strength index, even the market conditions, or is there any change in fundamental of the stocks. So all these things will give decision whether we should enter the stock or we should hold on. Okay. So yeah. One more thing I wanted to tell. So this selling, short selling is done by professional traders and our profession is different. So why it is important to know about this? So at least we'll come to know this is Wipro, at this stage, at the top of the any stock, there is a lot of emotions play role, that there is fear of moving out, there is FOMO taking place, there is greed taking place. So when we know about these patterns, we'll at least come to know that this bearish kind of pattern is forming and I should not enter this trade. When I should enter, suppose this pattern completes, there is breakdown, the target has been completed. In the accumulation phase, there will be accumulation phase in the bottom, and when the stock will start uptrending, at that stage we should enter the stock in terms of buying. So never trade against the trend. Next pattern, nothing related to Head and Shoulder shampoo, but the name is Head and Shoulder pattern. So this is again one of the most reliable trend reversal pattern. It predicts bullish to bearish reversal. That is, stock is uptrending, Head and Shoulder forms, breakdown of that pattern, and the bearish reversal starts. One more entity called inverse Head and Shoulder pattern. This predicts bearish to bullish. So stock is downtrending, inverse Head and Shoulder forms at the bottom, breakout of this will give uptrend. So there are 4 components of Head and Shoulder. Ajay sir, am I too fast or is it okay?
Okay, madam.
Okay.
Yeah.
So there are 4 components. There is a long bullish trend. The price rises to a peak. It subsequently declines. So buyers will take the price to the top. Okay. Sellers will bring down the stock to a particular support line. But buyers are still there. So price rises again to form a second peak, which is higher than this peak. Okay. Again, sellers will take action. They'll bring down the price. But again, price will take support. It will not move beyond this line. So this makes important neckline. But some buyers are still there. They will take the price up, but price will not move beyond this level, beyond first peak. And then sellers will take full action and will bring the price down. Okay. So neckline is very important in Head and Shoulder. How will you plot it? The line connecting between first and second trough is called as neckline. Now, it is not necessary that all the patterns will have flat neckline. It may be skewed also. I have put example afterwards. And importance of neckline, it acts as a support or resistance. So this is how the pattern looks in price action. So this is a live chart, Ashok Leyland weekly chart. So first and third peak are called shoulders, and this highest one is the head. So left shoulder, head, and right shoulder. This is persistent system. So stock is uptrending. At the top, there is Head and Shoulder formation, left shoulder, head, and right shoulder, which has broken down. The pattern is broken down and downtrend had started. So how to trade? Entry again at breakout of the neckline. Stop loss about the right shoulder. Price target, the difference between high and low of the pattern is subtracted from the breakout price. So this is persistent system. See the neckline, we have joined these 2 troughs. So the neckline is skewed. And let's see whether the target has been achieved. Okay, so from where we'll draw the target? From here, we'll place one more horizontal here, and this total vertical height we'll take as a target. So this is a price range, gives us automatically. So the difference is 439 points, and we will subtract it from here. So we'll plot it from the breakdown. So the target has been achieved. Here the stock has accumulated and begin uptrend. So at least we'll come to know that we should not enter at this level or at this level. This is Ashok Leland. Distance, the target is 62 points or here 60.5 points. It has been achieved. So from 170, the stock has dropped down to 43 rupees. Okay. Now the next is inverse head and shoulder. This is opposite of head and shoulder chart. This follows the downtrend seen at the bottom. This is very reliable indicator of bearish to bullish reversal. So here sellers are taking down the stock. Price attains particular low point, forms support. Buyers, they'll take the stock up, but here there is resistance. Again, sellers will act. They'll bring down the price further down than this peak, but buyers will again come into action. Again, here is a resistance, and now here sellers are exhausted and buyers will take full control and breakout of this resistance line will occur and uptrend will ensue. So, yeah, left shoulder, right shoulder, and head. Volume during inverse head and shoulder, ideally volume expands at breakout. So any pattern during the pattern formation, usually the volume will decrease and during breakout, there will be expansion. So this is TVS Motor weekly chart forming left shoulder, head, right shoulder. What is our target? This side. So highest point till the lowest point. So this full is our target. Whether it's achieved, yes, 180 points. So here the target has been achieved and stock has further moved up. Now it's trading, I think, around 1300 or something. Okay. So where we'll take entry? Here. So at this breakout level, there will be entry. Okay. And stop loss will be here. Okay. Now next is cup and handle pattern. So this is technical indicator that resembles a cup with handle. This is again a bullish signal and it is used to spot opportunities to go long. That means being bullish or buying the stock. The cup is in the form of U and the handle has a slightly downward drift. So what do you mean by this cup? The cup is usually saucer shaped or bowl shaped. During this curve formation, there is prolonged consolidation which is taking place. The curve formation takes long time. It may take from few months to 1 year or more. Okay, so there is long-term consolidation which is going on. This bottom of the cup makes important support level. How much should be the cup depth? Usually it should be around 1/3, which is ideal. So the uptrending stock will retrace up to 1/3. How do we know about the retracement? By Fibonacci levels. Sometimes in volatile market, this cup may show depth of say around 50% or half of the retracement. So here buyers will take action. They will bring back the price to this previous level, resistance level. Okay. And then again, there will be some retracement, say around 1/3 of the cup, and this handle will form and breakout of this handle or breakout of this upper trend line will give uptrend. So how will you look for cup and handle pattern? How will you identify or hunt for it? So suppose any stock is uptrending, it will stop at this level, then it will retrace up to 1/3, ideally 1/3, maybe more than that. And then this will make this saucer shape. Again, there will be retracement, upper trend line, lower trend line, and breakout above this upper trend line. Volume decreases as the price will decline in cup formation and lowest in the base of the bowl. Increases when stock begins to make its move higher. So during uptrending of the cup and during breakout levels, it is the highest volume. Entry, price closes above the upper trend line. So this closure or breakout candle should close above the upper trend line. Target is the height of the cup is added to the breakout level and stop loss usually below the handle. Okay, so this is cup and handle pattern in KPIT technology weekly chart. So this is uptrend. The stock has retraced, forming a nice cup. There is again retracement at this resistance level. This is forming handle and this is a breakout candle. So what is our target? 328 points. So the maximum height of the cup we take as a target, and whether it's achieved, yes. So the target has been achieved. This is one more ICICI Bank. the cup has formed, handle has formed, and it has given nice breakout. The stock is still trading yet to achieve the target. Now, next is rectangle pattern. It's usually most of the time it is continuation pattern, but sometimes when it forms at the bottom, it may act as reversal also. So out of 3 rectangles, 2 may act as continuation and 1 may act as a reversal pattern. So how rectangles, what is specific about rectangles? There is resistance line above and support line below. Each resistance and support line should be a trend line. What do you mean by this? That price must touch each line at least twice. So 1 time, 2 time. Again, support line price has touched twice, first and second, and both the trend lines are always parallel to each other. The price is bounded by and oscillate between these 2 lines and eventually gives breakout in any direction. So it can break out upside or even it can break down. Duration rectangle formation takes, the period is variable from few weeks to many months. Ideally, rectangles will develop over a period of 3 months. If the pattern is less than 3 weeks, it is usually considered as a flag, which is again one more continuation pattern. Volume, there is no any standard volume pattern. At the breakout, volume decline during the pattern formation, and at breakout, volume increases. So this is Tech Mahindra daily chart. Okay, rectangle formation, both the lines, resistance line and support line are parallel to each other. 2 points, first point, second point, and at support, the price has touched to the support line 2 times. Okay, even 2, 3 times. And here the breakout has started. This chart I had identified on 5th of July. Okay, what is the target? So add the height of the rectangle formation to the breakout level. Now there are 2 methods of rectangle trading. First is range trading and second is breakout trading. What do you mean by range trading? So people buy here, buy at support and sell below the resistance line. Stop loss will be at support. Or sellers will do what they'll do. They'll sell here below the resistance. Target will be above support. Their stop loss will be around resistance. But this is not recommended unless and until the rectangles is very wide from top to bottom. So what is recommended is breakout trading. Entry as usual when price breaks above the support or resistance line. Price target, rectangle height, stop loss below support or above resistance. So this is again Tech Mahindra. I have intentionally put this chart because what has happened, breakout had happened, but see here, the target achieved was only this much, around half, and then the price again came down within the trading range, within the rectangle. See the large volume candle over here. Okay, this is Voltas forming rectangle breakdown. So this is a rectangle. What was the height? 129 points. So here the target is achieved. Okay, next is triple top. So prior uptrend is necessary. It is bearish reversal pattern. Specific about the pattern, it has 3 highs. 1, 2, 3 should be reasonably equal, not necessarily perfectly equal. They should be well spaced and mark clear turning points to establish the resistance. This neckline, the lowest portion of this line, this trough will form the support level. So every time we may not get this perfect pattern in the reality. Okay. So this neckline marks important support, and when this support breaks, the pattern formation is complete. Volume declines during the formation. After the 3rd high, there is an expansion of volume on subsequent decline. So here, when the this decline starts and breakout, during this period, volume is usually high. Entry as usual, when price closes below the support, and price target the maximum distance between the resistance and support. So this is Mahindra Logistic weekly chart, 3 tops, 1, 2, 3. This is the lowest point making support, and the total height is 200. Here, this support line is broken. The movement is very fast. See within how much period the target is achieved. So 200 points target achieved here. Okay, and the pattern is complete. So at least this bearish reversal pattern at least will come to know that I should not take trade here or here. I should take trade when the stock has started uptrend. So this is again one more triple top formation in TVS Motor. first top, second top, third top. This line from this side to this side is a target. This line I have purposefully extended. I'll tell you later on. So whether the target is achieved, yes, 72 points is the height and target is achieved here. Some consolidation and then price has started uptrending. So avoid taking entries, don't trade against the trend. Yeah, so this line has acted as an resistance line here. The same line has been extended. I just put horizontal at this point, okay? So the same line has extended, has acted as a support line over here. Here again, it is acting as a resistance line here, here, and even in future. Yeah, so this. So here it is acting as a resistance line. Resistance has broken. Stock has started trending upwards. Again has fallen to this resistance line, which has now become a support line. At this support line, the inverted head and shoulder pattern has been formed, which we had seen initially. Okay, and then it has given breakout and has started upward journey. So this has acted as an important support line. Now coming to triple bottom, this is bullish reversal pattern formed after a considerable downtrend at the bottom. It has three lows, 1, 2, 3, same like triple top. It is mirror image. So three lows may not be perfectly equal, but they should be in reasonable range within each other. So these patterns, triple top and triple bottom patterns, they are very rare. But when they form, the failure rates are very low. So the failure rate is 10% for the bottom and 4% for the tops. So what is important for the triple bottom? Prior trend, it should be downtrend. Okay, so this is a prior trend which is downtrend, has come to a low point, buyers taking action, could not take the price up, again price falling down, but again has taken support here. 3 times this has happened, and here there is exhaustion of sellers and buyers are into full action, breaking this resistance line. So the highest point marks the breakout. Okay. What about the volume? So same like triple top during the third high. So here and at the breakout, the volume will be high. So let's see whether the target is achieved. So we take this height of the pattern, we'll add it to the breakout level. So how much is this height? 232 points has been added to this. The target has been achieved and the price is still uptrending. Now it has started some downtrend. So here see the price, the pattern is so strong that pullback has not occurred. Okay, so there is no chance for second entry. This is ITC. So again, triple bottom. 1, 2, 3 bottom horizontally placed. This has made the neckline or resistance line. Height is 29 points, easily achieved. So again, the pattern is so strong that there is no pullback, no chance for second entry, is still uptrending. Okay, so this was about reversal patterns. Now coming to continuation patterns, which are triangles, pennants, etc., flag, etc. So these, what do you mean by triangles? There are non-parallel boundary lines such that when they are extended into future, they will cross each other. And when the point at which the two lines extend and cross over each other is called as apex or cradle. The distance between first high reversal and the first low reversal within the triangle is called as base of the triangle. So these are the types of different triangles. First is ascending triangle, descending triangle, and symmetrical triangle. Now, what do you mean by ascending triangle? The upper line is horizontal, like in triple top. Okay, so this is a horizontal line. The lower line is ascending. So this support line is ascending line. Okay, so this marks support line, this marks resistance line, this is a apex, and this is a base. From this high point to low point, this is a base. So ascending triangle, it can break either way. Usually the chances of downside break are very high. It's logical because there is failure to make further higher tops here. The price is not making further higher tops, so chances of downside breakout are very high, but it can give sometimes upward breakout also. What about volumes? Declining volume is common, but not necessary. And when do the breakout occurs? All breakouts usually happen roughly around 61% of the distance from base to cradle. So breakout is not happening here. It's happening well before. Okay, so around 2/3 of the distance the price has traversed, and then there is breakout. Even here, same thing is happening. This is more favorable for downside breakouts. Failure rates are something between 11% and 13%. So this is ascending triangle. This is joining upper two tops, horizontal line, and this is ascending support line. Okay. The breakout has happened. This is upside breakout at this level. So around 60-70% distance from base to cradle. The target from the lowest point here to the highest point here is 28 points has been achieved. 1 or 2 points less, but has been achieved. Now coming to descending triangles. So there is lower horizontal support line and declining upper trend line. The price should touch each line at least twice, that it should be a trend line. This is true for any triangle, any flag. Okay. The price should touch the trend line at least twice, and it should generally fill the triangle's place. Breakout for this is again more common for downside. So 64% usually break downside, but upward breakout can happen. So this is resistance line and this is support line. When the price breaks the support over here, the downtrend starts. So this is descending triangle Infosys daily chart. So this is horizontal support line and this is declining upper trend line. Okay. This is the apex base and the breakout has happened over here around 70% of the distance. This is again upside breakout where the target is achieved. Yes. So this is 177.9 and target is easily achieved. This is Mahindra Logistic descending triangle. So again, horizontal support line and descending resistance line. Okay. Target this full light from here to this horizontal is 105 points. So target has been achieved here. Now, during triangles, a strict breakout strategy is required because many false breakout can happen. It will break out and run, will break out and pull back to its trend line, break out and pull back to its cradle, break back to the cradle beyond the triangle. Anything can happen. So this is a perfect example. Okay, breakout has happened but has not achieved the target. Before that only, it has fallen back even beyond the triangle, again trading upwards, again back, and then finally it has started its upward journey. Okay, so false breakout are known to happen, so we should be cautious. Now next is symmetrical triangle. This upper bound is downward sloping and the lower bound is upward sloping. Again, principle, price must touch each line at least twice. Breakout will happen well before 75% the distance from base to cradle. Okay. Again, it has many false breakouts, so we should be cautious. So this is symmetrical triangle container corp. Okay, so upward sloping support line and downward sloping upper line. So this is symmetrical triangle. How do we take the target? Highest point here to lowest point here. So this point, what we can do, we can put horizontals here, lowest point here and highest point here, and take distance between two horizontals, 125.5. The target has been achieved, a bit lower, but achieved. Okay, how to trade, I have told you. Now, this is a statistics on triangle. This table just shows what is the overall performance. There is a financial Balkovsky. So Balkovsky has studied all these patterns extensively. He has, he has graded these patterns, how much is the performance rate, how much is the failure rate. And so there's a site called as the pattern.com, which is good site really. It has given various patterns. Main patterns we are covering, of course. And then next continuation pattern is the flag. Why it is named as a flag? Because it resembles like a flag on a flagpole. So there is a short-lived trend, original trend, which forms the flagpole. And then there is a sharp counter trend which forms the flag. Okay, so let's see how it happens. So this is a uptrend. This is bullish flag. Okay, so there is a sharp move. Then price has taken halt here. There is some retracement in the price, consolidation happening, forming flag, and then again breakout of this flag has happened and price is resuming its original journey uptrend. Okay. So it's a short-term continuation pattern which makes a small consolidation before the previous move resumes. Usually this flag marks a midpoint of the move. There is heavy volume should be there at the breakout, and the pattern typically consists of between 5 to 20 price bars. Usually these two lines are parallel to each other. This is a parallelogram. They should be parallel to each other in flag formation. So this is bullish flag and this is bearish flag. So here support has broken. Okay, price has started trending downwards. This makes flag pole. There is some correction of the price. This makes this flag. Again, that flag has broken down, making downtrend is resumed. Okay, so this is example of flag, Mahindra and Mahindra daily chart. So here the upward journey as so there is original uptrend. Here there is breakout of the resistance line, and then upward journey. This whole makes a flag pole, and this is a parallelogram which makes flag. Okay. Now what is the target in flag pattern? First target this side, second target half of the flag pole, and third target full length of the flag pole. Okay. So whether it's achieved here. So what is the distance? What is the price range? 179 points. So this whole has been achieved, and then price has started taking U-turn. This is again one more ascending flag in State Bank of India. So here flag pole and formation of a flag. This is descending flags or bearish flag. So this is a downward journey. Here the support line was broken. This makes pole as a flag pole, and here there is a correction. There is a formation of parallelogram which makes the flag. When the lower line is broken, the downward trend resumes. Again here there is a formation of flag. Again the support is broken and downtrend has resumed. Okay, so this is how continuation pattern works. So this I've just put how to show how the price action takes place. So this is Wipro chart again, uptrend. This is one continuation pattern. This is again flag. There is double top formation at the top. Again support break of this double top formation. Downtrend journey has resumed. This is one more flag. This is one more flag. Downtrend is continuing. This is channel formation. Again there is breakout of this channel. Okay, this is next is pennant formation. Pennant is similar to flag in terms of structure. Only thing, they have converging trend lines during their consolidation period. Flags, there are parallel trend lines. Pennants, they have converging trend lines. So it's like a small triangle. It usually lasts from 1 to 3 weeks. Volume, the initial move is a large volume. The pennant should have weakening volume. And again, at the breakout level, there is a large volume. So there are again bullish pennant like bullish flag and bearish pennant like a bearish flag. So breaks above the resistance line, the uptrend will ensue in bullish pennant. Break below the support line, the downtrend will ensue in bearish pennant. Target, first target half of the pole length, and second target the initial flag pole length. Okay, so here there is a pennant formation. This is Sun TV network. Okay, so this makes the flag pole, and this is a pennant formation. Same like a symmetrical triangle, it's like a small triangle. So whether how much is the target? The flag pole length is 61.8, and the target has been achieved over here. So this is one. This is Container Corp weekly chart. So this is one more pennant. Now the last is wedge pattern. Just few lines I'll tell. A wedge pattern indicates a reversal. Price touches the trend line at 5 points. There are two types of wedge pattern, a rising wedge and a falling wedge. Rising wedge signals bearish reversal. It happens opposite. Wedge is rising, the stock will break down downwards, and falling wedge which signals a bullish reversal. There are converging trend lines over 10 to 50 trading points. So the characteristic converging trend lines, a pattern of declining volume when the pattern forms and breakout of the trend line. So this is rising wedge. So at 5 points, the price should touch the trend lines. First, second, third, fourth, and fifth. So rising wedge, and this will break down. And this is falling wedge. 5 points, price is touching the trend lines 1, 2, 3, 4, and 5, and then price will break on upside. So coming to the concluding slides, the grand checklist. First, the stock should form a recognizable price chart pattern. Support and resistance should be confirmed to trade before we enter into the trade. The stop loss price should be around support and resistance. Ensure above average volumes on both buy and sell day, and look for rest of the indicators like RSI diversion, MACD, or rest of the technical analysis indicators you're comfortable with. What is the market trend and what about the fundamentals of the company? Okay. Take home message: to plan the trade beforehand, write down the entry, stop, and your target. Note any variables that will change your stop and profit target. Remember, emotions can cloud our judgment, so mind management is very important. Remember, what goes up must come down, so market works in cycle, and know yourself. Thank you so much.
Thank you, Dr. Tripti Mahatme, for that wonderful, detailed, and a very basic, clear, and nice presentation of various patterns and shapes to tell us the possibility, probability, or predictability of the trends in the share prices through the volume synchrony. Some of the charts, I open the platform for any questions from our participants. But the first doubt I had, Dr. Tripti, is about some of the prices below which there were volume bars or charts. Some volumes are remaining flat, but the prices were going either bullish or they were going bearish. How does this reflect? I mean, how do we interpret rather? I mean, the volume remains flat. The bars are flat. They are not going up with the rise in the price or drop in the price. The volumes are remaining same. And the prices are moving up and down. I'm a total novice to the technical analysis. We have got other experts here who will comment, but I just wanted to clarify this particular anomaly which I have seen.
Yes. So, sir, not every time we'll get those big bars, unless and until significant institutional activity is taking place. Of course, at breakout, it is there. But what do you mean by high volume? The thumb rule is usually, the volume for today. If suppose there today is a high volume, it should be more than last 10 days average volume. That's why I told the thumb rule. Okay. This is anyone, Suren sir or anyone else can add to this, I think.
No, and one more, madam, you have also mentioned that somewhere daily charts, somewhere you have mentioned weekly charts. How do we select a chart when you want to study? Okay.
So if we are plotting on a trading view, on the bottom side, there are various durations like year, 1 year, 5 year, 3 months, 6 months. So if we select 3 months, the duration of the candle will be like 1 hour. If we select 1 year, the duration of candle will be 1 day. So those will be daily candles. If we select 5 years, we will get weekly candles. Okay, so in trading view on our left hand side at the bottom, we will see all these durations. So the best thing, to know about how to plot trend lines, how to know about the durations, you can use trading view for surfing. Whenever we have free time, rather than surfing on WhatsApp and Insta, I think it's better to surf on all these platforms, which will give better learning and some really some good outcome.
Yeah, we have Dr. Chapesuran in our audience. Yes, and who is our, as you watching and seeing, he is really learned a lot, and then he's been presenting lot of charts for learning in our WhatsApp group. I request Professor Chapesuran sir to kindly comment.
Good evening all. First, I'll congratulate Dr. Tripti, madam. She has presented very nicely, actually. So although we have learned so many things, but what is important is what I still think trading view is just a tool. Okay. it has to solve a problem. Whenever you are using any form of tool, first we have to identify what problem we want to solve it. Okay. And second thing, huge number of tools are there for technical analysis. The great Bruce Lee, boxer, who says, I fear not the man who has practiced 1,000 types of kicks once, but I fear the man who has practiced one kick 1,000 times. What we want to mean is, we have to select few of the tools which will regularly be using and mastering on them instead of using so many tools. Okay, that's the thing. Now, next thing is whatever the problem is depends upon for what purpose you are doing. Is I using the tool for a long-term investment? Is I doing for a swing trading, or it is a day trading? All will be completely differs. Second thing, while analyzing, 2 time frame analysis is must, not a single time frame. Suppose I am using daily or weekly, okay, swing trading, fine and good. But somebody is doing daily day trading, he might be using hourly or 15 minutes or 5 minutes also. So 2 time frame is must. And so many tools are there. If I'll tell what I use, because I will be doing a swing trading also. Basically 2 things are there. Core, I not be using much of the things. More often depends upon the fundamentals, but exit will be deciding based on the technical fully. In this, the goal of investing core and satellites, briefly I will be telling you why it is important. My target of achieving is 18% return from the core. And satellite, I might be targeting 30, 35 to 43% return in satellite, and satellite will be 30% of the capital. So if I'll add them, suppose I have the 100 rupees, 30 rupees is satellite, 70 rupees is core. So my return will be coming 12.5% from each. So ultimately, all total return will become nearly 25 to 26 rupees %. Okay. That should be the goal to achieve. So why that goal is, I want to multiply double in 3 to 4 years, 3 years. That should be the goal. Okay. Sure. Otherwise, if I am not keeping a target of 25, 26%, 18% I can achieve through the mutual funds. Good quality mutual fund, they are giving 18% nearly. Okay, 12 to 15 from the index funds. So because I am taking my time, okay, spending my time to research and all, so higher target is mandatory. Otherwise, waste of the time, because you will be monitoring the thing. And second thing, every day is not needed for the swing trading. Day trading, they may minute by minute they require. Swing trader, we need to spend 2 to 3 hours in the weekends. So basically more of Friday closing. Friday closing, you see, by Saturday afternoon, you have find out what are the 4 or 5 stocks you are choosing. And again, should not be, satellite should not be more than 8 stocks. Out of the 8 stocks, your allocation, you may be higher allocation, maybe to 4. Rest of them only tracking position. And many often, so why that 43%, again, before telling you that 4%, I am telling you. So if you are targeting 3% return on a single trade or a single stocks, okay, you will be doing 12 times amount in a 1 year. So you require only 12 trades giving you 3% return each to achieve a 43% return. Done with a compounding. 3% I will be compounding 12 times, become 43. Okay, so that's the thing. So we will be requiring almost, if you are getting it out of the 8 trades, if you are doing good at 2 trades, that is enough to achieve that one. And again, all set up on the weekly. You don't need to see. If somebody does not want to see at all, at least only see in the weekly once to set up what to do the next. Second thing, all positions allotment will be only 1% in a capital in a single stocks. If by the week here it is increasing, will be adding up, and you have a fixed stop loss will be following. Nearly 8% is the maximum stop loss. So first tranche 8%. Second tranche, again the risk will be 8%. By third tranche, no risk will be there. So always you will be getting with a positive. And next thing is, while setting the thing, the first thing, I don't do any form of the sorting. No form of sorting. First is no FNO, no intraday, only swings and the long term. And only trading has to be done, only market is upwards. Just like now is going on uptrend market. One. Number two, I will be selecting the which market cap, whether large cap or mid cap should be up. Suppose now mid cap is up, only mid cap has to be done. Okay. Suppose large cap is showing cautious, only mid cap. Third thing is, whichever the stock I have chosen, I look whether sectoral tailwind is there or not, whether sectoral index is doing or not. That's the third point. Fourth thing is, I look for the company. And when I am analyzing company should be in the stage 2. That's the first thing. If it is not on stage 2, no. Next thing is, look for the pattern, whatever the madam has told. But among the so many patterns, I prefer only 2 patterns, either making a base formation. Okay. So initial base formation fall is there with a slowly initial high volume fall. Slowly what happens? The volume is rising, price started rising, but base is not even completed. Means scope part. Second is cup and handle when it forms. These are the only things. Now once I have selected that stock, now look, I'll check for the RS. RS should be positive. Relative strength. Again, RS should be positive against the broad index and against the sectoral index. That's the next thing. Once is RS is confirmed, next is RSI. Should be more than 55. Then ADX I can check more than 25. So these are the things what I look for while doing a swing, basically. And always in a tranches, I don't invest any amount in a lump sum. That's my strategy. That's all. And sometimes once I have tried just by looking at the parabolic SAR. Okay, 1 or 2 of them. Stage 2 stock, just parabolic SAR. Just if the dot is there, price is above, just track it. It will give you exit, you exit it. If till not has given exit, you can continue adding up the tranche. Even a single indicator one can do in a market when it is trending. Without knowing any fundamentals also we can do based on the indicator, because that gives you the exit. Because once you have learned the risk management, I don't think anything. That's it from my side.
Thank you, Dr. Soren. I think we have to have that much of knowledge and experience and also dareness, I would say, to do what Dr. Soren is doing. And I will be requesting him to definitely come up with a detailed talk later on for the benefit of all of us. There is a question for Tripti Madam again from our participant, Dr. Raghul. He says, these charts which we have declared and just now studied and learned, how long do you have to follow them? Is it only a daily chart or a weekly chart and only one frame of the, sir has said you have to do it in 2 time frames. So what is your recommendation to have a firm belief of predictability or probability of the trend? Madam, you are muted, madam. Yeah.
Trend should be confirmed on any 2 time frames. As sir has said, if we are doing swing trading, daily and weekly, even for long term, we should confirm it on weekly time frame also. How long should we look for the pattern? Means when the target is achieved, ideally when the target is achieved, then if you are doing swing trading, you can come out of the stock. So yeah, just one time frame, hourly time frame, 4 hourly time frame, daily time frame is not important. If you are looking at W bottom or inverse head and shoulder, look for the 2 time frames. Even weekly time frame is important for long term.
Yeah, but sir, what I do is don't set any targets. Okay, why I don't? Because some stocks will be trending, they are going to do so by setting a target. Okay, but I have a risk management. If falls below this, I will be exiting. Exit will be there, but target will not there, because you will be missing the multi-baggers if you are doing a target setting. Because in a trending market, some stocks will be very fast. Suppose recently Glenmark Pharma, we have traded Too much. Okay, it was trending. It is not giving us exit. Till is not giving exit. Why? Now all this pharma are doing very good, like Aurobindo, Natco Pharma, and this one. Okay, they had not triggered the exit.
Yes. So till reversal has started, till we get some reversal point, we can enjoy the journey.
Yeah.
When we get reversal point, then we should
Yes.
come out. Then that FOMO and greed should not, hamper our trading journey.
Yeah.
So
Yeah.
when the uptrend starts moving to downtrend, identification of that trend analysis is very important. Then at that particular point or during that period, we should exit rather.
Yeah.
Because when downtrend starts, the journey is usually very rapid.
Yes.
I just want to also get some practical tip. How long you people watch the charts? I mean, is it daily or is it weekly or is it monthly once? How exactly you suggest that our participants who are a little bit basic level to watch these charts? And how many companies and how many sectors? Tripti madam first and then Soren sir, of course.
Okay, so to start with, learn about basic candlestick, how the candle is formed, and then learn about how the pattern is formed. Just to practice, identification of pattern once it's formed is very easy. But ideally, we should understand that the pattern is forming, and we should keep that company in our watch list so that we can take timely trade. So daily practice is essential, just so that just by visual seeing we can identify, yes, this is forming now. So at least, tracking any 2-3 companies, 4-5 companies, at least tracking Nifty, you can track at least one chart daily is essential. How the candle is forming, how it is opening next day, how it is closing, how the breakout is happening, how the next other indicators are forming. That's from my side. I'll pass it to more expert.
Yeah, I think to practice Nifty 50 tracking is very good, madam.
Yes.
I think that is what we learnt in WealthCon also. Chape Soren sir?
No, one more thing I want to say, sir, how I get those stocks ideas. Okay. First thing, the Tijori will be giving you sectoral reports in how the performance, Tijori Finance. Okay. There you can assess freely 3 times in a month. Okay. So what I do is, with the 3 different emails, I have different setups. So weekly once I will be checking it. Okay. So I have the 3 different mine accounts, suppose other Google accounts. So 3 assess I will do 3 times free. That's enough for me to assess how the sector performance. Once from that I'll get which are the stocks are doing good from that sector. Then only I'll go to the trading view. That again trading view 1 to 2 hours weekends. That Friday closure. That's the thing. For the next week setup I get.
There is a report recently published by Security Exchange Board of India, which our Zerodha owner Nitin Kamath has also tweeted. He says in trading, 98% of the people lose money, and only 1 or 2% of the traders will make money or earn money. And apparently I see here one of them right in front of us, Chape Soren sir, another person is sitting here, Tripti Mahatme madam, who has mastered these charts, and also Dr. Harish Gopal sir and Dr. Naresh Bihani. I think in our group, I am seeing at least these 4 people who are experts. But there is a question, sir, how much money you have to lose, how many times till when you start learning, become experienced and getting a confidence and conviction to invest basing on these chart movements?
No, sir. I have with a different investing community. Okay, where we frequently collaborate and discuss. Okay, so all from the different backgrounds, not only from the medical, because some are from finance, some are banking, some are the other faculty. So we discuss frequently in the weekly. So we have a different system in there. So we find out and we do collaboration.
Yeah, that's wonderful of Tripti madam to take us to the journey of a very simplistic and nice, clear your way of presenting the candlestick chart and the trend lines and the pattern. I hope a lot of our participants have learned it. Some of them are really newbies, and some who have already experienced have gained a revision sort of a picture. Before I end, if Dr. Harish Gopal sir is there, I will request him to come forward and present his views for a closing remarks. Dr. Harish Gopal sir. I saw him entering, but right now I don't see him. Anyways, I like to request today to Dr. Tripti madam, because she is from Nashik. Just now, Nashik IMA has done a mega conference with 1,800 delegates, paid delegates, both hybrid, physical and online. I have seen both the days, madam, both the sessions. And I have selected 8 speakers and 8 topics, which are really useful, wonderful, and nicely high quality, high clarity, and a very good presentation and learning process. Will it be too much if I ask you to at least give their numbers so that we will start asking them to participate and come as a guest speaker in our group?
Sure, sir.
I have certain names with me. I will be putting up in the faculty group, madam, and then kindly help us. And I've seen the topics are really good, like medical entrepreneurship, how a doctor should start a good hospital and scale up. And what is indemnity insurance, how well indemnity, because these are the topics we have not yet covered, and these are all food for thought for us. And then Dr. Chapesoren's favorite topic, stock selection and how to create wealth in stocks. 2 different speakers spoke very well in a different perspective, and I like to probably request them to come over here. And there was one wonderful new thing called metal trading in silver. Silver metal trading, and the doctor was very confident, and he's on a long term, not on a short term as a trading. And then Dr. Yogesh Joshi spoke on AAA, that is Amar Akbar Anthony, that is bonus, dividend and split shares. I think that is a very good topic for knowing also. And Dr. Agrawal spoke about cryptocurrency and digital currency in a very elaborate way. I think we should have one talk for with him. And Dr. Rajnikant Gajjar spoke very nicely about how to plan financially for above 60 years of doctors who are seniors, how we should plan for them, the retirement program and the rest of the 30 years of the life which they live after retirement. And financial behavior is a very good topic, with the pulmonologist Dr. Dipendra spoke about Daniel Kahneman's book, Think Fast and Think Slow. He summarized that the financial behavior, because mindset, you also said in the introduction that we should learn mind control. There should not be no emotions involved when we are investing, because investing is a very boring job where we have to wait for a long time to get create a wealth. So I think there some of the topics I liked it, madam, and with your help, being a Nashik resident and our good wishers and goodwill person here, kindly see that we will get
Ajay,
one after another.
Definitely.
Ajay sir.
Sir.
So in the August, I am going one of the investing accelerator summit in the Goa, Novotel Goa, from 17th August to the 20th August. They are usually investing mindsets. Some of the PMS fund managers and as well as some TV anchors from the G business will be coming.
Yeah.
So 4 days program in the Novotel Goa I will be attending.
Very good.
After returning, I will present the investing mindset, what I will be learning.
Definitely we will have, and as our other senior faculty members are also toying with the idea that even Hyderabad should conduct a physical meet after seeing the bumper success of Nashik. Of course, we may not match IMA's credibility, not credibility, at least the strength of IMA. IMA is a bigger organization, but we will definitely think in terms of having a physical meet in Hyderabad, probably an hybrid. We will discuss later and come back to you all. So with this few words, thank you very much. We will look forward for the next week's talk by Dr. Rajesh Kulkarni on credit cards, I think, and myself and Dr. Harish Gopal sir are going to Bangalore for a physical finance meet by Indian Academy of Pediatrics Bangalore chapter. and we will be there. Hopefully, we will be coming back and may not be there moderating the session. I request senior faculty like Dr. Chapesoran, Madam, if you are available on next Sunday to kindly moderate and comment for the session. Thank you very much.
Okay, thank you, sir.
We can now leave. Thank you, sir. There will be a recording link available to all of us in the YouTube channel. We will
Any
post
questions are not there? Audience questions? Anything?
No.
Not there. Sir.
No.
Okay.
Yes. Yeah, Musdog doc tripled in 3 months, trailing now, so something like that is there. I don't know. We'll be able to do. Thank you very much. We'll conclude and leave. Good evening to all of you. Have a good weekend.
Okay. Thank you. Thank you, sir.
Thank you, sir. Thank you so much.
Thank you.